Welcome back to Trading Day here on Sky News Business. Well, the local currency's been treading water around that 94 US cent mark, sometimes slightly above, sometimes slightly below. Will the RBA minutes today give it the final push it needs to stay above 94? Well, Matt Simpson, Senior Markets Analyst at Xenon Forex, joins us now live from Melbourne. We did see it over 94 overnight, but it's quickly gone back below this morning. Yeah. So is this release in 45 minutes by the Reserve Bank, is this enough? Would it be enough to actually give the Australian dollar a further push, do you think?
Well, frustratingly, I think we're going to continue demand around that level. Whilst the minutes will be closely watched, I suspect we're not going to get any new information we've not already seen from the RBA on previous statements. So what we typically see around these is we might see an up spike, a down spike, and then we end up trading back where we've begun. But really, there's more data coming out later this week, which I think have more of a directional cue on the Australian dollar. Particularly from the US, we've got CPI, we've got housing data, but the most important one, I believe, would be the FOMC economic projections on Thursday night for us, where recently we had the IMF, for example, they've lowered the growth forecast for the US. If we see a similar stance from the FOMC in their projections, and that's going to bring up the pressure on the Aussie dollar. Whilst we continue to trade around the 94 level, I've got a target of 94.5. We dropped about 25 pips shy of that just last week. I suspect we'll be seeing that later this week, and then if we can get convincingly above 94, we should be on target to reach 95, hopefully by next week.
Okay, so you do think it's, well, you've been quite specific, the economic projections from the FOMC is what would get it to 94.5, or that's what would get it to 95?
It's if they come in and start lowering their forecast or their projections, and that's going to bring the upward pressure on the Australian dollar.
You don't think, is that not already priced in? Because you've seen, say, the IMF even just do it, and even some would say, yeah, we get it, the IMF's done it after the rest of us have. So
possibly, but there's other factors as well playing in hands. So if we look at the COTS data, large traders remain to be increasingly net long. So every week they've come out, they've been buying for the past few weeks now. They continue to be at the highest level since 2013. And there's even talk of Australian dollar being a safe haven at the moment as well. So depends what happens in Iraq as well. We may continue to see people looking for yields as well as going to the Australian dollar.
And talking of the concept of interest rate differentials when it comes to currencies. Just looking at the forecast this morning now from Macquarie, they've just changed their rate call. But previously they were saying there would be a cut at the end of this year. They're now saying a hike not until 2016, which puts the Reserve Bank of New Zealand starkly in focus for us, doesn't it? Because it's already hiking rates, talking very hawkishly about continuing to do the same. That really sets us in quite stark contrast if you look at a call like Macquarie, doesn't it?
Yeah, no, it does as well. It's going to bring a lot of upward pressure on the Kiwi dollar, and I suspect that we'll see new highs on the New Zealand against the US dollar, and it's going to perform a lot better than the Australian dollar. In fact, I've got eventually a bearish forecast later this year for the Aussie dollar to finish around about 85 level, where the Kiwi dollar should be trading to new highs as well. They're in different parts of the economic cycle, and that's going to have an impact as well on the Aussie Kiwi, which we've already seen sink to 3-week lows off the back of last week's rate hike as well. So all in all, the Kiwi dollar itself, it's not just the United States, the US dollar it's going to go up against. It's a good currency against most pairs at the moment. In particular, if you want to look at a risk-on, risk-off barometer, New Zealand yen is one of the better ones to be looking at, because we've got the escalation in Iraq is kicking off a little bit. So the yen's rising, yet the Kiwi yen is the only one that hasn't moved at all. So the Kiwi dollar is still standing up very strong against the yen in light of the conflict.
Okay, so that's the ultimate kind of risk-on or risk-off indicator at the moment for us, because it's certainly not the Aussie, is it?
No, certainly I'd say I'll be watching the Kiwi yen for risk-on, risk-off, and that will work on all time frames as well, so for intraday traders and longer-term traders. And I'm actually pending a bullish breakout on Kiwi yen shortly as well. So I'm also expecting that to trade to new highs. We've hit a new cycle low. It's looking very good for the Kiwi dollar. Not so great for the Aussie dollar, but it's not looking so bad either. So I do suspect we should be getting up to 95 hopefully by next week. Okay.
Anything else that's catching your eye across FX markets at the moment?
Yeah, I've been trying to get long on dollar CAD as well. It's been teasing me above the 1.08 level, and whilst it does remain above there, I suspect we should have seen a cycle low on that. So even though the United States dollar is a little bit hit and miss across the board, I do think it should be going up against the Canadian dollar as the weeks progress. So that should be trending new highs as well.
Great stuff. Matt, thank you very much. Appreciate
Pleasure.
it.
Thank you.
That's Matt Simpson there from Think Forex, who joins us from Melbourne. That's